The United States has officially removed Uganda and 3 other African countries as beneficiaries of the African Growth and Opportunity Act, or AGOA. The move effectively ends Kampala's ability to export certain commodities to the U.S. duty-free. In a decree dated December the 29th, U.S. President Joe Biden said he had determined that the 4 countries, Uganda, Central African Republic, Gabon, and Niger, did not meet the requirements necessary to allow them to continue benefiting from the trade deal, affecting his earlier stated plans to delist them. Biden said Uganda had engaged in what he called gross violations of internationally recognized human rights. Well, for more on that development, we're now joined by Isabel Nakira from Uganda's capital, Kampala. Hi there, Isabel. Isabel, in the 12 months to June 2023, Uganda's exports to the U.S. under AGOA amounted to just over $8 million US. Isabel, how significant is this development of Uganda being removed from trade under AGOA?
Quite significant, I must say, the U.S. being the world's biggest market for sub-Saharan Africa. And despite Uganda exporting just 11% of its good under this trade deal compared to its East African neighbors that exported over 40%, this makes it still significant because Uganda exports some of its high-value goods to the U.S. market, like coffee and textiles. And you know, Uganda is Africa's top coffee exports, and this makes it a big foreign exchange earner for Uganda. And you know, coffee is Uganda's biggest agriculture export. And so without these revenues coming in from coffee, that means great losses, great revenue losses and great job losses. Some of the small-sized companies that have been exporting to the U.S. under AGOA, that means they would shut down, and that means thousands of job losses.
I'm going to ask you about that a little bit later on, Isabel, but for now, Uganda's agri-sector, you've mentioned this, the coffee that it was exporting to the U.S. under AGOA, you know, has been hit and is going to be hit in the coming years as they've been removed from AGOA now. Is Uganda looking at other markets to fill the loss of no longer being part of AGOA, Isabel?
And just coming back to coffee again, in 2023, Uganda gained export earnings of worth $1 billion from this U.S. market alone. And so this is quite significant. And that means 70% of the workforce in Uganda may lose their job losses because 80% of the goods that are exported to the U.S. under this market from agriculture. But President Museveni has been adamant. He said he's not intimidated and worried over these sanctions because he looks into getting other friendlier nations in the East like Russia and China to plug into this gap. But of course, this may take quite some time because this was a duty-free market. And the Ministry of Trade this week say that they are confident that they'll, tap into other markets. But this may take quite some time. And of course, job losses can't wait. Revenue losses can't wait.
When you talk about all of that not being able to wait, when it's going to come into fruition of finding these other markets, what is the response of people in Uganda and also the response of businesses when it comes to Uganda's stance?
Uganda stands to be readmitted into this deal probably after 2025 when the expiry comes to pass and a new trade deal signed because the U.S. has already made it intention that it will sign a new trade deal with other sub-Saharan Africa after the expiry of this deal. But this all depends on whether the anti-gay, anti-homosexuality law is thrown out of court. At the moment, the law is being appealed in court, and we are awaiting a verdict which may come in any time from now. And we do not know whether this law will be, thrown out or it will be maintained. But we think that when the law is thrown out, then Uganda stands to, be readmitted into this deal. I've talked to a number of small-sized businesses that have been exporting via the AGOA, and of course they've grown. Businesses have grown in trade volumes over time, and that means these businesses will shut down, and of course they are worried that they'll not be able to maintain their workers, and of course revenues will go down.